I believe in DeFi's financial future despite the crypto market's recent collapse. DeFi, or decentralized finance, has several uses beyond cryptocurrency. DeFi will provide more transparency, inclusion, and hopefully better regulations to the financial system and its future. DeFi's core is permissionless, hierarchy-less, transparent, open, sourced, and secure. This installment will investigate the crypto winter and its effects on DeFi's future. Before we move further, subscribe to our channel for more updates. Let's take a look at what transpired in the cryptocurrency world to scare investors and bring down the leading cryptocurrencies' market caps. What caused the crypto bear market? Terra. Luna was a proof-of-stake blockchain that processed bulk transactions and built a stablecoin crypto ecosystem. Terra network had substantially cheaper fees than MasterCard, Visa, Amex, and other crypto networks. Terra was intended to replicate the Fed's and other central banks to avoid major price fluctuations. That instance, when the currency value falls, reduce supply to match demand to raise the value. Increase supply if the currency appreciates too much. To do that, it needs its sibling coin Luna, the blockchain's native currency. The ecosystem would destroy Terra tokens when their value dropped below $1, restricting their availability and raising their price. Why destroy tokens? Because Luna tokens are incentivized and can be sold at 1 Terra or traded for other cryptocurrencies. If Terra rises beyond $1, they will print extra Terra tokens and give them to Luna currency holders. Theoretically, Luna holders would profit on both sides. Luna holders profit figuratively from thin air, something only central banks can do in real life. Why was Bitcoin affected? Luna Foundation bought nearly 350 bitcoins as reserve currency weeks before the meltdown. Investors feared a huge Bitcoin sell-off due to Luna's fast drawdown and market cap drop. Celsius Network, an SEC-compliant lending platform, lets users earn interest on deposited cryptocurrency or borrow crypto collateralized loans. They promised fast, fee-free transactions, but their main draw was large payouts, sometimes as high as 18% on cryptocurrencies like Ethereum, Bitcoin, and even USDC. I promised to write on why USDC, despite the stablecoin crashing around it, still continues to attract users to it. They even launched their Euro stablecoin. In April 22, Celsius Network stated that its CEL currencies could be stolen, posing a huge regulatory risk. Celsius was then bombarded by regulators requesting proof that some of its products weren't circumventing securities regulations. Finally, Celsius froze withdrawals, transfers, and swaps on June 12. Solvency difficulties and averting a run on the bank triggered the postponement. 3AC had borrowed various digital currencies and had exposure to several synthetic assets that were underperforming, but DeFi's ethos is why it's vital news for the cryptoverse. This brings us to the market performance and crisis response of publicly traded crypto businesses. Unfortunately, most responded immaturely. Massive layoffs, investment cuts, withdrawal freezes, and other activities affect ecosystem stakeholders. Public opinion turned against crypto. Last week's crypto lows confirmed this. So the crypto bubble burst? Both. To properly answer it, we must examine several key metrics and determine stock market terminology. Even if too many crypto traders purchase and sell in seconds, we'll use the stock market's 52-week long term. This indirectly measures cryptocurrency volatility. If trade volumes drop for at least 5 sessions, the price will fall. We can then determine if current price patterns will return to historical highs. Is its glory past? After 5 days of price drops, even whales find it hard to support the cryptocurrency. Death spiraling. Like Luna. This can show if and which coin new investors are entering the crypto market. See if dormant wallets begin trading. Buying or selling. Which coins? Taleb, a crypto critic, made a compelling case for why Bitcoin is not an asset class. But his period to check other asset classes is intriguing. After the GFC, quality stocks and assets were cheap in 2009. The argument assumes US assets. Critics can identify various countries where all assets underperformed Bitcoin by a large margin. DeFi solves what? After the stunning cryptocurrency fall, let's look at DeFi, which cryptocurrencies offer to deliver. What is DeFi? DeFi refers to Bitcoin and blockchain-based financial services that disrupt financial intermediaries. It facilitates secure, transparent, and hierarchy-free peer-to-peer financial transactions. DeFi uses blockchain to implement. DeFi lets you earn interest, borrow, lend, purchase insurance, trade derivatives, exchange assets, and more like a bank. Only faster and cheaper as you no longer pay middlemen to facilitate transactions. This could make internet accessible financial markets more open, free, and fair. DeFi has to fix traditional finance, TradFi, but how? First, transparency. Esoteric underwriters know what goes behind your loan application. DeFi seeks system transparency through distributed ledger technology. Middlemen's cut followed. How much did investment bankers lose after so many IPOs tanked and retail investors lost their money? None. They all made more money than last year. As in COVID, I went home with a huge bonus check. These two ideas also increased financial inclusion by making the financial system more accessible. Why? According to Ilya Lohr's, government-controlled money assures 2% inflation annually by manipulating currency demand and supply. DeFi hedges against inflation because the money supply does not vary with government changes. Decentralized applications allow consumers to cut out platform middlemen and gain more control over their personal data, which platforms acquire to personalize their products. DeFi regulations. The decentralized world has witnessed too many upheavals in recent months, leaving many individuals bankrupt and without redress. Cryptocurrencies plummeted, lending platforms refused withdrawals, and DAOs ousted initial investors. This has harmed the market and reduced system credibility. Governments worldwide have taken two basic approaches to combat it. One is restricting DeFi entry, like India and China. However, you are limiting your citizens' ability to engage in a democratic society. U.S. Senators Cynthia Lummis, R. Wyo, and Kirsten Gillibrand, D. New York, proposed the Crypto Bill, D. New York. The measure seeks to clarify industry and regulators while allowing for digital assets market evolution. The measure may also require a self-regulated body, a sandbox for DeFi project development, and more. There is a third option. Salvadoran style. Buying massive Bitcoin reserves at its all-time high and buying more on the dips? Most of their residents don't comprehend Bitcoin or how to utilize it to hedge against inflation. It's fantastic for making foreigners' lives easier. The scheme fails to protect Bitcoin merchants from value loss. Join the conversation and tell me where DeFi is headed. Do you think this bubble will burst? Please share your thoughts. Finally, share it with others who could benefit. If this was helpful, subscribe to receive the next version on your feed. Thanks for watching.